You wouldn't get one open there.
Hold on, I just want to make sure that I am recording. Next computer. Okay, so that's all good. Alright, so we might get started. So, as everybody is no doubt aware, there's been lots of announcements, both from the federal government, but also by the state government and various departments over the last couple of weeks, of measures aimed at trying to support the economy as the current COVID-19 pandemic takes hold. So what we're planning to do this evening is we'll just go through quickly what all of that stuff is, as it currently is, and then we'll go through what the thanks to the guys who've just joined. We've just started, so you haven't missed too much. So what we're going to do is go through the measures quickly. Talk about what sort of federal, state level, also what the tax office is doing to try and help people. May not be the right word, but try and make it easy for people in the current circumstances. I've got some examples in a little bit more detail on some of the measures that have been announced, just to allow people to get their heads around what it actually will mean for them. And then I also want to just chat about what things should you be doing with your businesses now, so that you can make informed decisions about what you do going forward. Hopefully it won't take more than an hour to go through it. As I said, stick your questions in through the chat. I'll pause as we go along so that we can try and deal with some of them. Obviously this is, I guess, a general session. What I'd encourage you to do, if you, obviously I'm not familiar with everybody's circumstances, so what I would recommend is reach out to your accountant, reach out to your solicitor. If you don't have either of those, feel free to come and see me and we can talk about that stuff offline. But yeah, let's get stuck into it. He says excited. Okay, so what have we got? We've got expanded eligibility to income support payments, so that's job seeker, or for those who aren't up for the lingo, the dole, and other support payments. There's 2 lots of $750 sort of lump sum payments that are being made now to what they call eligible people. So it's basically people who are on pensions, they're already on income support. If you're getting some sort of child family benefits, potentially you're eligible for that. There's measures allowing temporary early release of super, so 2 lots of $10,000 you can draw, even if you're not currently old enough to be drawing on your super. They're also reducing the minimum super drawdown rate. So when you are eligible to draw funds out of your super, there's a minimum amount that you need to take out every year. They're reducing that, and it's something that they did in the GFC as well. They're reducing the social security deeming rate, so that affects rates at which you get paid as well. Now, so they're more aimed at individuals, those measures, but they do have a relevance for people who are in business, which we'll go into later. So there's the cash flow boost for SMEs and not-for-profits, which is probably the main one that people have heard about over time. So we'll go into a bit of detail about that as to how it works, because it's not necessarily the simplest of thing to get your head around, and it'll depend on how big you are and what your withholding is. So we'll go into that in some more detail. There's been an introduction of some temporary increase in thresholds at which creditors can issue statutory demands. So that's both the dollar figure for debt. So for companies, they've moved it from $2,000 to $20,000. So if your debt's more than $20,000, now, or less than $20,000 now, a creditor can't issue a statutory demand. Reason why that's important is that's the starting point of a creditor starting to wind your business up. It's from 5,000 to 20 on a personal insolvency point of view, which is relevant for sole traders. And then for companies, there's also a temporary pausing on the requirement, the insolvent trading requirements of directors. So for 6 months. So theoretically, your business can trade insolvent in the next 6 months, and as a director, you won't be personally liable for the debts. Government has announced an increase to instant asset write-off from 30,000 to 150,000. Obviously, that's something trying to encourage people to spend and buy assets. That's for small and medium businesses. And threshold for that's up to 50 million in turnover. They've also introduced limited investment incentive. So if you purchase an asset over $150,000 between now and I think it's 30 June next year, you can deduct 50% of that cost up front. So if you were, for instance, thinking about installing a ski lift that's going to cost you millions of dollars, you might be able to deduct half of that up front in the first year. If you're looking at buying a vehicle, say, for your business, and for instance, lots of tradies drive around, and if somebody wanted to go and buy a ute, for instance, it's a Ranger and it costs you 55 grand, you can now deduct that all in 1 year. That's basically what those two items mean. Doesn't get you any cash now, but it'll save you on your tax bill for this year, assuming that what happened over the next few months doesn't mean that you end up in a position where you're not paying tax. There's wage subsidies for apprentice or trainee wages for businesses that have apprentices and trainees. Basically, again, it's for that small, medium business sector. The threshold for that is that you have less than 20 full-time equivalent employees. And then there's a $1 billion fund that they've announced to support regions and communities and industries. Nothing specific about which regions and communities and industries at this point, but I'd imagine that there'll be some dollars that comes out of that potentially towards hospitality type businesses, tourism businesses, those that have really been at the front line and have specifically been shut down. So no doubt there'll be more to come out of that over time, but at this point, all they've done is put some money aside so that they can deal with it at some point in time in the future. We got any questions there, Fiona? In the chat? No.
I've got a question.
Olivia's got a question.
Self-managed super funds.
Yes.
Can we access in the same way that 10,000 if we have to?
I believe so.
Yeah.
Yes, I believe so. Because they're all, basically the withdrawal rules are the same, whether you're in an SMSF or an industry or retail fund. So government's also announced what they've termed the Coronavirus SME Guarantee Scheme. So what this is allowing people to do is get access to 3-year unsecured loans to the value of up to $250,000. Because of the government is guaranteeing half of the balance of those loans. So effectively what they're doing is providing the security for the loan for you. Which should allow you to access them at more reasonable rates, so more like you would if you put a property up to borrow. They'll have a 6-month repayment holiday. They're supposed to become available from the 1st of April. You need to apply through banks. We can go into that a little bit more later on. Related measure is, you'll recall that we had a Royal Commission into the banking sector in the past, and the banks got beaten up over a number of things, one of which was their responsible lending obligations and how they applied them. The banks have now been given an exemption from applying them, so they're basically going back to potentially the same set of rules that they were applying before the Royal Commission. The reason for doing this is to try and stimulate the banks to lend. To that end, I had a conversation with a client today. He had an application in to get some funding 3 months ago, still hasn't got it approved. We had terms come back from the bank last week. They asked some more questions, we sent them back, we haven't heard for a week. He spoke to his relationship manager today and he's gone, oh, well, the bank's actually not lending to any new clients at the minute, but you're an existing client, so you'll be okay. Realistically, we don't know what we're doing at the moment because we're trying to work out who we can lend to, what sort of liquidity do we have. So the banks are going through a fair bit of turmoil themselves. So whether or not these things make a lot of difference at this point, I don't know, but certainly the government's intention is that this should allow some money to flow to the economy, so we'll wait and see. Yeah, the RBA's announced that they're going to provide funding at basically 0.25% interest to banks to hopefully keep the interest rates down for SME borrowers. Again, this is to try and alleviate that funding pressure from people, so that hopefully they can keep spending money, even if it is just to be able to pay employees and keep some sort of economy going on, so that it's not a complete disaster for everybody. Alright, so just bear with me, I'm just trying to find my... Can you see the chat there, Fiona?
I can.
Yeah, have we got any questions?
No, everybody's
At
just
this point?
on okay. They want to know about the poll, but other than that, we're good.
Yeah, okay. Alright, cool. We'll keep going on. So, ATO administrative relief. So the tax office has announced how they're going to apply the tax laws from an administrative point of view throughout this current crisis. Realistically, it's similar to what they've done for drought and bushfire measures. But with the drought and bushfire measures, they've been limited to specific regions. This is across the country. So basically what they'll be giving is extensions to pay activity statements. They'll allow you to change quickly from quarterly to monthly activity statements, so that if you do refunds, it'll speed up. You'll be able to get a refund back monthly rather than having to wait every 3 months. They'll allow you to vary your PAYG instalments for the current financial year to nil, so your March quarter instalment will be coming up, so you can vary that to nil. Usually the way the system works, if you vary your rate and it's less than 85% of what it should have been, the tax office can charge penalties and interest on the shortfall amount. They won't be doing that in the current situation. They've also said that they will allow you to get a refund for PAYG instalments that you've paid in the September 19 and December 19 quarters if you varied your rate to nil. So something for you to keep in mind from a cash flow planning point of view, that you can go back and, if you've been paying PAYG instalments, you can go back and potentially at least get that cash back from the tax office. The tax office has said that they'll remit interest and penalties that have been incurred on tax debts from the 23rd of January this year. Now, the 23rd of January is the date that they have said that that's when the pandemic effectively started here in Australia. So basically what that means is if you've got debts accruing and there's interest on it, it's worth having a conversation with the tax office and trying to get those amounts back, and they should do it. They'll also have, they'll also offer low interest payment plans, so rather than being charged the full general interest charge, which is generally a rate that's 8 points higher than what the basically the RBA rate is. They'll offer low interest payment plans. I'm not sure what the actual interest rate is on those, but it might be, it might be 2 or 3%, which is better than the full GIC. Interesting thing, I was on a webinar yesterday with the ATO officer who's been tasked with sort of leading these measures. He said that at this point they're not offering lodgement deferrals, and the reason that he gave was that they want to be able to see that they want people to lodge whatever returns are due, so that they can see the data, particularly around what's happening from a trading point of view, what's happening from a payroll point of view, so that can be provided to government to help make decisions as to what to do next. So that kind of makes sense. The other relevant part of that though is accessing the small business cash flow boost. You need to lodge your returns to do that. So if you don't lodge, you're not going to get it. So it's another reason why they don't necessarily want to be giving deferrals, I would say. Just move on to the next one. Okay, so the state government has announced one round of stimulus measures. So they're waiving payroll tax for the next quarter, and that's for businesses with payrolls of up to $10 million. So if you're in a position where you've got enough staff that you're paying payroll tax, you won't have to pay payroll tax for the next 3 months. They've also announced that they're bringing forward the increase in the payroll tax threshold to $1 million from the next financial year. I'm not sure when it was supposed to go up, presumably the year after that. That'll provide some small relief. It's a couple of grand really, 5 or 6 grand on 100,000, but they're doing something. They're also waiving a range of fees that the state government charges, licence fees, so around bars, restaurants, trade licences, all of that sort of stuff. Probably not big bickies, but I guess if you look at the way that our system works, most of the big revenue is raised by the federal government. The main drivers of revenue for the states are stamp duty, land tax and payroll tax. So at this point, from a business point of view, the big one's payroll tax. So that makes sense. So what does this all mean? Realistically, when you get into the detail, it depends on how you are set up and how you operate. So are you a sole trader? Are you a partnership? Do you operate through a company? Do you operate through a trust? Particularly where you're self-employed, and if you've got employees, this makes a difference. Yeah, it depends on how many employees you're paying, so that affects what you might be able to get as some sort of incentive from the government. But realistically, we're at a point where you need to make some difficult decisions about what you're going to do with your business, and particularly from the point of view of protecting what assets you might own. As I said, there's been some concessions given around insolvency provisions, but they're basically a deferral. So you don't want to get yourself in a position where you put assets at risk because you've tried to hold on too long. So realistically, my advice to people is you need to sit down, as much as it might be hard to get your head around it at the moment with everything that's going on and things are changing very quickly, but you need to try and put a plan in place for at least the next 6 months. Mike Tyson did say that everybody's got a plan until you get punched in the face. That's probably what's happened today. Over the last couple of weeks in particular, we've all been punched in the face effectively. Yeah. But now's the time to sort of take a breath and hopefully you haven't been knocked out, and you can get back up and work out what you actually are going to do. How are we going for questions, Fiona?
Yep, that was.
No new ones? Okay.
Feel free to ask some questions, guys.
Yep, questions are welcome. So what I'm going to go through in the next couple of slides is just what it means for the different types of business structures. So go through what it means for a sole trader, go through what it means for a partnership, a company and a trust. So bear with me if it doesn't relate to you. I'm just trying to cover off as many bases as possible. Okay, so, oops, sorry, went the wrong way. So sole traders. Sole traders can access the cash flow boost if they employ staff. If you don't employ any staff, you can't access it. Now, why is that? If you're a sole trader, you can't employ yourself. And to get that cash flow boost, it's all driven off being registered for PAYG withholding and lodging BASs and declaring income, even if you don't have any wages being paid, even if you haven't had to withhold any PAYG because the wages aren't high enough that you need to withhold. So the key message out of that is sole trader, if it is just you, you won't get access to any of the cash flow boost incentives that the government has announced. So what sort of relief can you get if you've had to shut your business down, for instance? So you can access the job seeker allowance, provided you meet the income test. Basically what they've said is if there's a significant decrease or shutdown in your business, you'll be able to access it. We've also modified the test to remain eligible. So if you're trying, you don't have to go and, if you're a self-employed sole trader, you don't have to go and look for jobs to remain eligible for the job seeker allowance. All you need to do is continue to work on your business. So keep it alive in the background so that it's ready to go when things turn around. The other alternative is you can access your super tax-free. So it's $10,000 if you, between now and June, that you can take out, and then you can take a further $10,000 in the next financial year. The eligibility for that is that either your business has been suspended or you've had a more than 20% reduction in turnover. The job seeker allowance talks about a sort of significant decline in business. It's not as specific as what it is for super. But that probably, it's probably a little bit wider pool that can get access to the super withdrawal. Having said that, given super's supposed to be there for retirement, my view would be hold off if you can on drawing that down. Might be hard to do, but
accepting the losses that the market's taken, rather than letting it recover.
Yeah, because potentially, particularly for those industries that have been shut down already, there may well be other forms of support that comes along. So if you could hold off as long as possible on that one, I'd probably do that. Sole traders, you're eligible for the instant asset write-off. You're eligible for the investment incentive if you decide to go and buy a ski lift to put on your Avonside Alpine estate, or a new tractor.
Rosemary from Squatters is listening.
But that investment incentive
Hi,
is probably a moot point.
What about a ski lift?
Most small businesses. Sole traders are eligible for the guaranteed loans, so that might be an option if you think your business is viable in the longer term and you just need some working capital cash flow. That might be an option for you. You don't have to borrow $250,000; it's just up to $250,000. Any questions? Sole trader questions? No. Okay, cool. Okay. So partnerships. I've got partnerships of individuals because ultimately what it means is that you're in the same boat as sole traders. So all the stuff we've just gone through, that's relevant for you. Now there are people that will be set up with partnerships that involve companies or trusts. The rules as it applies to companies and trusts will be more relevant for you. So we'll move on from there. Okay. So for companies, you can access the cash flow boost. Again, if you employ staff, you get access. If you don't, then you can't. Now, what does that actually mean? So there's probably lots of people that are self-employed, but they're set up through a company for asset protection reasons. And you're not taking a wage, you're taking drawings, and then at the end of the year, your accountant pays your dividend. If that's the case, then you're probably not registered for PAYG, which means that because you weren't registered for PAYG at the 12th of March, you won't be eligible for the cash flow boost. So you're effectively in the same position as the sole trader. So realistically, if you're looking for support from the government, you're going to have to go through that, either the job seeker allowance route or draw money from your super. Now, there's been quite a bit of discussion amongst accounting forums that I'm involved in over the last few days about, well, how can we get access for people that are self-employed through a company but not taking a wage? The view at the minute is that that's going to be very difficult because there's some integrity measures that are built into the legislation which has now been passed that basically says if you do anything to put yourself into a position that allows you to get it that you wouldn't otherwise have got it, then they're going to take it off you if they catch you. So I'd urge you to tread warily around that. So as far as instant asset write-off, so the 150,000 instant asset write-off, that applies to companies, so does the investment incentive. Companies are eligible for the guaranteed loans as well. Companies are eligible for the PAYG instalment concessions. So if because your company's been paying tax and you've been paying instalments, you can claim you can bury it in nil and then claim a refund on what you've already paid for this year. And as I mentioned, there's increase in the thresholds at which creditors can issue statutory demands, and also the extension of time limit on insolvent trading. So I hope I haven't gone through that too quickly. Any questions on that one? No? Okay. All right, so trust.
I can try, hang on. When can you apply for the SME loans?
Okay, so SME loans, we'll park that because I've got a slide on that a little bit further on, so we'll get to sort of timing and what the practicalities of it are.
Okay.
So trusts are they're kind of in between sole traders and a company. So again, if you're operating through a trust and you've got employees, you can get access to the cash flow boost. If you're effectively a sole trader but you're operating through a trust, you don't take a wage, but you receive distributions at the end of the year as your income, then again, you won't get access to that cash flow boost. So you're back in that same boat of having to try and access job seeker allowance and your super concession.
So no new tractor for me then?
We've got a few people that are interested in the trust, so yeah, we'll just go over that.
Okay.
I don't know how does it work? Yeah, they've set up a trust, but how does it work?
How does the trust work, or how does these rules work to the trust? So I'll go through how these are applied. So basically, if you've got a trust set up and you're paying employees, you'll lodge a BAS for the trust, you'll withhold tax in your BAS monthly or quarterly, and just like everybody else who's eligible, you'll get the cash flow boost back through that, the trust will, through that process. But unfortunately, if you're the only person working in it, and if you're not haven't been paying yourself a wage before the 12th of March, and you haven't been registered for PAYG.
They have, they have PAYG. Just want to know if you can go a little bit slower with that.
Okay, so I'm going to go into that cash flow boost in a little bit more detail after we go through this, so that might explain some of these questions.
All right, good.
The trusts are eligible for the instant asset write-off and the investment incentive. Trusts are eligible to borrow under the loan scheme. Trusts don't pay tax in their own right, so you won't have been paying PAYG instalments through the trust. So you won't get access to those concessions, but you may be able to do it personally because chances are the income's been distributed out to you and you're paying tax in your own name. So you can vary those PAYG instalments. So you'll get some relief there, I expect. Okay. All right, so cash flow boost. So I apologise if I double up as I go through this because I've sort of given you some of this information already, but I now want to go through the cash flow boost in a little bit more detail, purely because this is probably the main cash flow measure that people are eligible to get if you're running a business, outside of if you're in that world of having to go back and get job seeker or access your super. So originally it was announced it was 50% of PAYG withholding. As of Sunday, that's increased to 100%. And originally the minimum was $2,000 up to $25,000. So it's now gone to a minimum of $10,000 for the a minimum of $10,000 for the initial cash flow boost payments up to a maximum of $50,000. Then there's an additional round of cash flow boost payments where potentially you'll get a minimum of $10,000 up to a maximum of $50,000 again. So the maximum that you might get is $100,000. The minimum that you might get is $20,000 if you're eligible. Now, the thing I think where there's potentially some confusion around this is it isn't actually a cash payment back to your business. It's a credit that gets paid back into your activity statement account within the tax office. So what will happen is it's all based off lodgement of your activity statements. The first one that's eligible is your March activity statement, and that's doesn't matter whether you only lodge quarterly activity statements or monthly ones. The first one that's eligible is the March one. So when you lodge your March activity statement sometime in April, the tax office will process that. Now you'll have an amount at the bottom of that that says maybe you have to pay $10,000 to the tax office. If you're in a position where you're eligible to receive and you've got PAYG withholding, so potentially at that point you're eligible to a $10,000 boost payment. That'll get applied into that account. So if you had a liability potentially of $10,000, you then don't have to pay anything because that cash flow boost will offset that in your activity statement account within the tax office. If you had to pay $20,000, say, on your activity statement, and you're eligible for, say, $10,000 as a cash boost, you'll still have to pay $10,000 against that BAS. So you're not actually getting cash from the tax office, they're just reducing the amount that you have to pay. The other thing to keep in mind is if you've had difficulty paying your activity statements over the last couple of lodgements, so you've accumulated a debt in that account, again, these cash flow boost amounts will offset against that, so you won't actually see any cash come back to you. Now, if you end up in a situation where your BAS says that you're only due to pay $5,000, and that's the only amount that you'd have outstanding to the tax office, then you get the $10,000, it's credited against your account, you've got a $5,000 credit sitting in your account, that will be refunded to you. So the only way you're going to get cash back out of the tax office is if you end up in a position where you're due a refund after applying whatever credits you're due under this boost scheme.
Cool.
Any questions about that?
No, I think that's covered that. Yeah, that explained it nicely.
Okay, cool. All right. So, as I said, the first activity statement that it applies to is the March instalment, March activity statement. Where you lodge monthly, what they'll do with your March statement is they'll take whatever PAYG withholding you've got for that month, and they'll multiply it by 3 to work out what your initial boost amount is. So if you had, say it was withholding of $5,000 for the month of March, what they'll then do is multiply that by 3, so that's $15,000. So it's more than 10, so you'll get $15,000 as a boost payment into your account at the tax office. Now the initial amounts, so the initial sort of 10 to 50,000 applies to activity statements from March to June this year, and then the additional sort of 10 to 50 will be paid through the June to September activity statements, and how that flows will depend on whether you're monthly or quarterly. These boost payments, they're tax-free, and they're what's non-assessable, non-exempt income from a tax point of view. So basically what that means is that it won't affect your income tax position. If they were tax-exempt, then you don't pay tax on them, but it affects your ability to utilise losses going forward. So these are good. You get them. They're good tax-free. Or better tax-free than just normal tax-free.
Yeah, there's such a thing.
That's not a technical thing. Okay, so a little bit more on eligibility. So you need to have your business, so whether you're a sole trader, a partnership, company or a trust, you need to have had an ABN at the 12th of March, and your business continues to be active. The turnover of your business or related businesses needs to be less than $50 million. You have to have paid salary and wages that you're required to withhold on, and you're registered for PAYG withholding. And one of the little devils in the detail is that you need to have derived income in the last business income in the last financial year, and lodged your tax return for 2019 before the 12th of March. So if you haven't lodged your tax return for 2019 yet, which a lot of people may not have because you're lodging it through an accountant and it's not due until May, then at this point you can't rely on that limb. So the second limb is you have to have made GST supplies, whether they're taxable, GST free or input tax, it doesn't matter, from the 1st of July 2018, and you've lodged at least one activity statement before the 12th of March. So if you're quite delinquent in your filings, so you haven't lodged a BAS for the last 18 months, then at this point you may not be eligible to get this cash flow boost. So the tax office, the way that the legislation is written, the tax office has discretion to modify what they'll accept, but at this point what they're saying is if you haven't lodged anything basically from the 1st of July 18 through until now, it doesn't matter whether you would otherwise have qualified, you're not going to get access to the cash flow boost.
So will that boost automatically be applied to your account if you qualify, or is there some other application process?
No, so basically all you need to do is lodge your BAS.
Right.
So you don't need to apply for anything.
Okay.
And again, that's another reason probably why the tax office, from an administrative point of view, hasn't said we're going to give deferrals, because they actually want people to lodge so they can get access to the concessions.
I've got one other question here from Michelle.
Yep.
Can you explain the conditions for companies to convert the PAYG to nil for the September and December quarters to qualify for the PAYG rebate for those quarters?
Okay, that's pretty easy. So on your BAS, you have, so it's done through your BAS. You have the ability to vary your instalment. So you'll either have a fixed amount or you'll have to apply a rate to turnover. There's a box in there that says, or tick this box if you want to vary, what's your varied rate or your varied instalment amount, and you have to give a reason. But that's done through the BAS. So if you're lodging your BASs yourself, it's in where your PAYG instalment details go in. If you're unsure, speak to your accountant and ask them to help you.
No, it's not Corona, Steve. Sorry. Steve Cuff's been cheeky as usual.
Cool. Any other questions?
No, not so far.
Cool, good. Now, again, this is just to reiterate that integrity measure. So you won't be. So the way that it's worded is you won't be eligible if you enter into a scheme to become entitled to the boost if you weren't otherwise entitled, or to increase the amount of the boost. So basically, what that means is if you weren't, if you didn't have any wages and you start paying yourself wages, you'll fall foul of this and you won't be entitled. Similarly, if you had, say, one person getting paid and then miraculously you've got 10 people getting paid, they'll investigate that too, I'd expect.
But at the end of the day, each of the directors will be able to apply for the extended New Start payment, and that's what they'll get. Well, not New Start, sorry, whatever it's called now.
Same. Yeah. All right. So I've got 3 examples I'm going to run through just to give you an idea of how this works, because it is a little bit complex, and they haven't really gone into the detail in what's coming out in press releases.
Before you go another example, Kath wants to know, what if your income's low anyway because of the fires from this quarter? How is that relevant, Kath?
So income, it's not driven by your level of income, the cash flow boost. It's driven by the wages and PAYG withholding.
The tax amounts.
So it's not really relevant to how much income you've been deriving. All right, so this first example, this is straight out of the ATO material. So PAYG withholding is less than $10,000 in the first period. So you'll probably read it, but I'll run through it quickly. So Tim runs a small business. He's got 2 employees, and they both only earn $10,000 a year. So they're both under the tax-free threshold. So in his March quarterly activity statement, he reports wages and he reports PAYG withholding of 0 on that activity statement because they're under the tax-free threshold. So March is the first quarter he's eligible for the boost. Because his withholding is 0, it's less than $10,000. So his first boost payment will be $10,000, which is the minimum amount. Now, roll forward to June, Tim might be in a position where, because his employee, and most likely his employees are only earning $10,000 a year, he's below the threshold to have to withhold for them. So on his June BAS, he discloses 0, so he doesn't actually get any more, of the initial boost payment because he hasn't withheld more than $10,000 over those first 2 BAS quarters. So that's the first example. Any questions about that one?
So the implications are if winter theoretically doesn't go ahead and there are there is no tax withheld, then they'll miss the second lot. Is that what you?
So Not necessarily.
No?
So
Okay.
I'll go into that because that's an example I've got. down
Okay.
the track.
All right.
All right, so the second example is where you've got a larger business and your withholding is more than 50,000 over this first period. So, so in this instance, we've got Sarah. She pays 8 workers. They all earn good money. Her business is a medium withholder, so she's lodging monthly BASs. So March is her first BAS. She reports wages of $15,008 for the month of March. So what this means is that her first boost amount will be 3 times $15,008. So it'll be $45,024. So she'll get a credit back into her tax account of $45,024 once she lodges her March activity statement. So April rolls around. Same thing. Her withholding for April is the same amount, so it's $15,000. The maximum that she can receive in the first period from March to June is $50,000. So because she's already received $45,024, she'll only receive an extra $4,976. So by the time April's done, she's received her initial $50,000. So regardless of what she has in June, she won't get any more out of the initial pool.
And if she doesn't register to have to pay that much, they'll send her the difference back again as a cash.
That's right. So if for whatever reason,
Yeah.
that's more than what her actual GST, her BAS payments were,
Yep.
she'll get a refund.
She will get a check. Yep.
So now, example 3 is somewhere in between, right? So this is a business where your average quarterly amount is less than $10,000, but over the March and June quarters, it's more than $10,000 in total. So what will happen here is Fred will lodge his activity statement for March. He'll say that I've withheld $7,000 for March. He'll be eligible for an initial boost of $10,000 because that's the minimum amount. When he rolls around to June, it's $7,000 again for June. So he's now in a situation where his total for March and June is $14,000. So across those 2 periods, he's entitled to a total boost of $14,000. Because he's already had 10, he'll get another 4 out of the initial pool when he lodges June. And again, that's a credit into his account and we go from there. So that's the initial cash flow boost payments. Have we got any more questions on that at this point?
I don't think so. I think they're just, what's the questions here?
They're all probably asleep because the PowerPoint is...
No, I know.
I'm sorry about this, guys.
Okay, no, that's fine. We've got one question. Explain the 2018-19 tax return lodgement thing again in regards to extension granted till May for us.
Okay, so basically all that is depending on if you lodge your tax returns through an accountant to a tax agent, they get extensions depending on the size of your business. So medium-sized businesses, they'll be due at the end of this month. Large businesses were due in the middle of January. Small businesses and individuals are due in the middle of May. So that's what I'm saying. You may not have lodged because you're rolling along to drag it out as long as you can within those extension requirements.
So is there any point in rushing it now? Is it really not? Is there 12th of March is gone?
If you think you're going to get a refund, I'd get it in because that'll get cash back.
Okay.
Otherwise, it probably makes not a lot of difference. All right, so what I'm going to go through now is just some examples of how the same set of facts, but this is how the additional 10 to 50,000 gets distributed. So go back to Tim, that's our first example. So he got $10,000 in the first round. Now, provided his business is still active, bless you, provided his business is still active, he'll be eligible for $10,000 out in the next round. So he'll get $10,000 because that's all he got in the first round. Now, to be active, he's got to lodge a BAS between June and September to show that he's still trading, or still the business is still alive. The way that it'll work is he'll get $5,000 in the June quarter, and he'll get another $5,000 in the September quarter. So again, these are credits into your account. Now Sarah, so Sarah's the larger business, so she got $50,000 the first time around. So in the second round of boost payments, she's entitled to $50,000 again. Now, for the larger entities, they basically will get 25% in each month between June and September. So she'll get 12.5 in June, 12.5 in July, August and September. So she'll receive another $50,000 through her tax account.
It's all based on what you got the first
It's
time.
based on what you got the first time.
And it's not necessarily tied to the financial year there either. It's just
that
June,
second
July,
one,
August, September.
Yeah, that's right.
Yeah, okay.
And so our third example was Fred. So he got $14,000 the first time around. So second time around, he's going to get 7 and 7.
Troy wants to know, is Sarah single?
Well, I don't know, the tax office didn't put that in their example. They don't come with pictures. Okay, so is everybody comfortable with that? I know it's a lot to take in on a Thursday night, particularly with everything that's going on, so I do apologise.
Sounds good.
Okay, so that's kind of it for the cash flow boost. The next one that's probably I guess most attractive for business is the guaranteed loans. So again, the eligibility for these loans are small and medium enterprises, so turnover up to $50 million. The maximum loan size is $250,000 per borrower. So if you've got a couple of different businesses that you own and they're in separate entities, theoretically you can get 2 loans, one for each business. Loans are for a period up to 3 years, and you get an initial 6 months where you don't have to make any repayments, and they're unsecured, so you don't have to put your house up or other assets as security. Now the interesting thing about these is that you have to apply through what they've termed eligible lenders. So you've got to go through your bank or some other finance provider to get access to these loans. The scheme's supposed to start from the 1st of April, but the government in their press releases says, by all means go and speak to your bank now to see how it's going to work. Now, based on the conversation I've had with my client today, and he's relayed his comment with the bank, you may not get much luck with the bank for a little while. So that's potentially a problem in trying to get money quickly through this scheme. So this is different to the bushfire recovery loans in that those loans you basically applied through a government agency. These loans you have to go through a bank. Apparently there'll be a list of eligible banks at some point, but assume that that'll be at least the big 4, probably Bendigo and some of the others.
So if you've got deferral arrangements in place already, that's not going to stop you from applying for this one as well. Is that right?
No, it shouldn't do. But it's up to the bank to make a decision to lend, and they'll apply their policies, although they don't have to apply the responsible lending policies.
No, because they don't have the risk.
But you're still stuck within the bank's internal processes. So, which is different to your bushfire relief loans in that, yes, you had to make a credit application, but they were ignoring credit history and that sort of thing, which might have made it hard for you to get money out of the bank. So this will still be effectively a full commercial loan application. So it may not be as easy to get access to cash as what the government's hoping. Any questions about that? No? Good? Alright. So just thinking about, well, what other sources of funding can we get access to? So our council is in what's been designated as a bushfire impacted area. So what that allows us to do is get access to the two main ones, I think, as an alternative will be the Small Business Support Grant, which is $10,000. And what you've got to show is that your turnover is down 40% for a 3-month period since August last year. And apparently they're not asking for a great deal of information at this point, they're just reserving the right to come back and audit and see how you've spent it. So if you haven't done that, I'd suggest you investigate that and might be an option to get some cash.
A post went out about that one yesterday, so the link's sort of fairly top to the list.
Well, it's a downturn compared to the year previous.
Yeah, so since August. The second one's the special disaster loans. So there's two types of loans. One's a working capital loan, one's a recovery loan. So the working capital loans are the ones up to $50,000. The recovery loans are for up to $500,000. The good thing about these is that they're 2 years interest free, 2 years not having to make a repayment, and then they're at low interest rates after that. The recovery loans, the bigger ones, they're 10 years, but still with a 2-year interest free period and a 2-year repayment holiday. They've got a expiry date on applications, which is the 4th of August this year. As I mentioned, it is a full credit application to a large degree. So you've got to have your tax returns up to date. You've got to have your BASs up to date. You'll need to do forecasts for the next 12 months to 3 years. But the government a government department is assessing these, and they're not doing a full bank credit assessment. So they're ignoring any issues you've got with credit history, and they're not applying a full serviceability assessment of it. So this might be a better option for people to try and get funding out of this rather than trying to go down the path of getting 250 for two reasons. One, you might be able to get more, and the second reason is that these are on better terms from my perspective than what you get on those guaranteed loans. So something for people to think about. Questions before I move on to the next one? No? Okay. So...
Oh, hang on, I do have one, sorry.
Yep.
The bushfire 10K for here goes from your impacts, so New Year for us till now.
It's not specific. So the question was the bushfire one, does that go from the impact? No, it just says if your turnover is down for a 3-month period since August last year. So it doesn't necessarily for us have to be.
Yeah, which 3 months?
It could be any 3 months. You
can show one.
Is the general interpretation of it.
Okay.
So as I say, it's worth going away and having a look at that. So what can you do with staff? Because this is probably a reasonably big issue. So if your business is shut down, then there's provisions either in an award that your employees are covered under, an enterprise agreement or a contract. If you're not covered by that, if there's no stand-down provisions in those, then you need to go to the Fair Work legislation. But basically what they're saying is, if you have to shut your business down, you can stand staff down. If you've had a downturn, but you're still trading, that's potentially not enough to stand them down. Stand down is a temporary measure, which means that you have to reinstate
them
once business comes back online. So
and your business has to stop too, doesn't it?
Basically you have to stop. What else can you do? So some of the things that I've seen come through from HR providers that I have contact with and I'm on subscribe to. So potentially you can agree by mutual agreement with staff to reduce their hours. Maybe if you're paying them above award rates, you can come to some agreement to pay them only the award rates.
Changes in long service too?
There's changed access to long service. Requirement for employees to take leave, again, that should be done by negotiation. And if you don't think there's any way back, then you still need to go through a redundancy process. So I guess the takeout from this is take the time to speak to somebody who is an expert around employment legislation, because it's a nightmare and you don't want to cause more headaches for yourself. I guess the other message is talk to your staff. Don't just go and do stuff. Have a conversation with them, because no doubt they're all stressing about what's going to happen over the longer term.
Business Australia had a really good post on turning down your staff and having all the forms that they needed to read through.
I've got some of that stuff, and I've got what I'll get Fiona to circulate afterwards is I've got a document that's 8 pages long, and it's got a whole bunch of links of where to go for various types of issues and support.
Yeah.
So if you're worried your business is going to survive, speak to a registered liquidator or insolvency practitioner. So somebody who knows what they're doing in that space. They're all rubbing their hands together because this is when they make money, unfortunately. But they know what they're doing, and they'll be able to guide you through, because there's things that you can do before it's too late to potentially salvage your business without having to liquidate it and sell everything off.
The mic's not working.
Am I too far away? Probably. Sorry. So what I'm saying, if you're worried your business isn't going to make it, speak to a liquidator or an insolvency practitioner ASAP. And the reason for that is that there's things that they can help you with that might mean that you don't have to firstly lose your business, but secondly then lose personal assets as well. It's important to determine whether you're insolvent or not if you're operating through a company. And the reason for that is if you trade whilst you're insolvent and you're a director, you become personally liable for the debts incurred, which potentially is a disaster from a personal asset protection point of view. Insolvent means you're unable to meet, the company's unable to meet debts as and when they are due. Now it's not as simple as do you have the cash to pay it, but think of it in those terms. If I'm going to run out of cash and I can't pay what's due, then I've potentially got a problem. As I said, there's some temporary measures that are going to extend that insolvent trading concession from 21 days to 6 months. And the reason why they're doing that is to give directors time to try and work out what can they do, given things are moving so quickly. So what you need to be doing, if you think you're heading down that path, is go and speak to an insolvency expert, but also start having conversations with your creditors, so people that you owe money to, about this is where we're at, can we work out some sort of payment plan to get us through? Because doing those sorts of things potentially stop you from becoming insolvent. Speak to your landlord, because a big reason people end up into insolvency situations is because they haven't paid their rent and the landlord goes, right, I'm issuing a statutory demand, and that kicks it off. The other one's the tax office. So if you're going to speak to two people, speak to your landlord, speak to your tax office about money that you owe. Also go and speak to your bank about utilising hardship provisions and the concessions that they've announced over the last week around payment holidays and the like. So just some things, again, things for you to think about as we go along. I won't go into these because this is probably a bit too much detail for now, and you've been very patient and we've been going for an hour, so I don't want to bore you anymore. I'm going to circulate the slides so you'll have this. This just gives you an idea about what some of the options are, and you'll hear a lot of this stuff in the media, I expect, more and more over the next weeks and months. These are some links to key information. As I said, I've now got a sheet that's got 8 pages of links on it. I'll circulate that with some fact sheets and some other pieces of information around insolvencies, around employment matters, so that you've got some information if you haven't already got it.
Troy wants to know, does a payment holiday incur costs or extra fees?
So the question was, does a payment holiday incur extra costs and extra fees? I suspect the answer to that is yes. So you'll pay extra interest for that period because your loan won't be as small as what it was. So yeah, unfortunately, the answer would be yes. Okay, so what should you do from here? First thing, so this is the plan A. We got smacked in the face, we got knocked down, we've got up, we've dusted ourselves off, and we're starting to think a little bit more rationally about things. At the very least, put a cash flow forecast together and do a couple of scenarios. The reason for doing that is that'll tell you how long you can actually survive if you can only trade at 20%, if you shut down. Should I just shut my business down completely and walk away if I've been struggling for a long time? But this will at least give you some idea of where things are heading, how long you can hold on. Have a tax planning discussion with your accountant because there are things that you can still do between now and the end of the financial year to try and work out what your tax position is going to be, as well as try and get as much benefit as you can within the realms of the tax rules without causing yourself trouble. So that's the second thing I'd do. Third thing is prepare a business continuity plan. So go and sit down, go through the effort to go through who are my suppliers, who are the key ones that I can't lose, who are my key customers, what am I doing with employees, etc., so that you are clear on, can my business survive? Am I prepared to keep going? How long do I have to survive for? What do I need to do to keep it alive? I've got a process that I've been working through with some of my clients that we've over the last week, and that's the sort of thing we're going through. This is a bit morbid, but get your will and enduring power of attorneys up to date, because obviously the virus does cause deaths. Does cause people to be in hospital, incapacitated on machines, so you may need people to do things for you. The next ones are probably common sense things, but talk to your wife, husband, partner, other people that are close to you about what does it all mean, where are we going to, how are we going to get through it. Talk to your employees so they're in the loop, talk to your bank, talk to your key suppliers, talk to your landlord.
Rosemary wants to know what happens if the landlord's national parks?
Presumably you've got a lease, the lessor is national parks, you have to talk to national parks. The reality is it doesn't matter whether it's a government agency or it's Bruce. It's the same, right? But but there's been some pretty big retail chains that have shut their doors over the course of today. Some of them have been pretty aggressive with what they're going to do from a rental point of view, so potentially there might be some movement in that space around support, particularly for those businesses that have been ordered to stop. And I suspect that's what landlords are holding out for. They don't want to go too early because they may not get any relief from the government if they start giving relief now. But yeah, it doesn't matter. Speak to your landlord.
They were supposed to meet on that last night. Have they come up with any announcements today?
Nothing's been announced today.
No, okay.
Yeah. So that's it. That's my details on the back. So as I said, I'll circulate this. People can feel free to contact me. But if you've got an accountant, go and speak to them. If you've got a solicitor, go and speak to them. Sit down, take the time, get a plan together. And go from there. Thank you.
Thank you. I'm just putting your email address on here for the people that have tuned in on Facebook.
Okay, so Fiona's putting some details up for the people on Facebook. I'll make the slides available to Fiona. She can circulate them.
Yeah, thanks.
and some other information. If there's any other questions, feel free to send those through on the chat. I might sit here for another 15 minutes if people want to ask some more questions. But otherwise, feel free to log off. Sorry for taking so much time on a Thursday night. Hope everybody got some value out of it, and hopefully, as a community, we can come together and get through this.
Thank you because that was amazing.
Thanks, guys.
Don't worry.
Are we on mute?
No, we're on mute yet. Cool.
Awesome, thank you.
Okay. Have I got any other questions coming through? No.
No.
Okay, cool.
Just lots of thank yous.
Yeah.